Hey folks, welcome to Thursday Night Stock Charts Live. This is going to be our first opportunity to take a look at not how we are poised to open up next week, but also next month. Obviously, today is the final day of October. I am dressed up as a Sober October survivor. This is the last day of Sober October, guaranteed tomorrow night. I will be having either a single malt or a blended scotch, one of the two. Which is your favorite? Leave a comment wherever you're watching this out there on social media land. So let's begin by saying, as we see people enter, I'm going to draw this out a little bit so people get a moment to log in. I just want to make sure that we are live on Twitter. It appears as though we are. Facebook, welcome Facebook. And the game plan tonight is to first do a rundown on the major indices to see how they are poised to open up not just tomorrow, but how they're setting up for the close of this week, because that will portend the probability of them behaving well next week and next month, obviously. So we're going to do a rundown of the major indexes. Then we'll segue into our watch list of positions that we're watching. We have some alerts out there. We'll follow up on them, see how they're poised to close out the month. And then what we're going to do after this is we're going to head over to a private members group session where we'll take questions from members, and I'll answer their questions with regards to their symbols, their requests, and questions with regard to trades that they have in mind, trades that they're in, and I'll give them my feedback. Members, I will be sending out a separate link to that private session. Expect an email coming immediately after this rundown of the symbols that we're watching. And it is at current 6:02 in the p.m. Eastern Standard Time. Usually I'm saying 5 a.m. Eastern Standard Time. So it's nice to be mostly awake rather than being half asleep at 5 a.m. in the morning. So let's all right, so people are slowly moving in here. Good. Hello, all. Good to have you. Great. All right. We have a bunch of people on YouTube watching, Periscope or Twitter, Facebook. Good. I just want to give people a moment to join in here, and then we're going to get started. We have a Facebook discussion group as well, and I finally was able to go live on that discussion group today. It was a service that we use, gave us a deal, and yeah, we're live there too. All right, good stuff. Okay, let's begin with the symbols that we're watching into the new trading month. We're going to go over monthly charts. Perhaps I'll dip into the weekly charts. Happy Halloween to everybody. Oh, and by the way, we're going to be using TrendSpider as our software. They are our sponsor. We're big fans of TrendSpider because they are the next generation of technology for automated technical analysis. I'm going to drop their link and discount code into the chat box. Hey, Tom, how you doing, brother? Okay, we'll go over those. And we're also doing a special, a Halloween special on our titanium level for Halloween only. It ends tonight. So if you want to join in on the private session tonight, simply go to the checkout page, use discount code T50. I rarely sell on this, but I'm giving a special. And it's the annual membership, only on the annual memberships. I can't do it on monthlies. I want people that are committed to trading. And yes, you get a 14-day free trial offer. With TrendSpider, you get a 7-day free trial. So click that link there. And we are ready to go. Okay, let's get to it. Let's begin with the indexes. Now, today we had a pullback in the markets, obviously. A blurb out of China about not them expecting a deal. Listen, what that's all about is that they don't want President Trump in 2020. They want Elizabeth Warren. They want Hillary Clinton. They want the corrupt Hillary Clinton. They want Bernie Sanders. Anybody but Trump. They'll take Mitt Romney. Anybody but Trump. So they will do anything possible to not have him reelected. Their economy, take a look at their economy now. Not that this wouldn't happen eventually, but I went over this morning on Swing Trading Today. The Chinese banks are on the verge of collapse after sudden bank run. This is not the first time. This is becoming more of the norm over in China. Absolutely corrupt system, and they are beginning to feel a real serious pinch over there. They don't want Trump 2020, so vote Trump 2020. All right, so let's get to the charts. Monthly view of indices. Let's begin with the S&P 500. All right, so you can see that we put in new all-time highs for the month. Where are we going here? We had a horrible day in the markets today. The doom and gloomers were out there saying, oh, the market rally is over, no deal with China. Folks, the market's going higher. If you listen to these thugs on Wall Street, they will sell you short every single time. They want you to stop out. They want you to bail so they can buy on the cheap. They're taking this market up higher. We pulled back for the month of October, did a retest of the rising lower band of support. We are getting to break out in November. And remember, seasonality is coming into effect. We may have some choppiness in November. I won't discount that. But as we proceed into late November, into December, in all probability, we will gain our footing and we will proceed higher. Now, how do we appear poised to close out the week? Not too bad. We're holding a breakout here on a weekly basis. The only concern I have here with the monthly view is where we have upper bands of resistance. You may be saying, what are you talking about? How do we have upper bands of resistance at all-time highs? Remember that using TrendSpider, you get a projection. They automate it. They connect prior highs, and where are they coinciding with right now on a weekly basis? Exactly where we saw the highs of October. So might we get a pullback beginning tomorrow in this market? Sure. Do I think that this market's broken? No way. The Federal Reserve has the markets back into 2020. That's been made loud and clear by the Federal Reserve. You need to really reread their statement yesterday, replay Jay Powell's testimony yesterday, statements yesterday. They got the back of the markets, so no worries there. The Dow Jones Industrial Average, monthly chart. We rallied up into resistance. No clean breakout yet. So it's lagging the S&P 500. How do we look as we proceed into the new trading week? Next week, we remain in a wedge formation, looking for a breakout here. And for those that are just joining, if I may ask you to, if you're watching this on YouTube, please click that like button. Leave a comment, share with a friend, click the subscribe button, get notified of when I go live in the future. And for those just joining in on YouTube, I just put some links in if you wanted to join TrendSpider with a discount. I'm running a discount as well, so there should be a link down there for you in the chat box. And if you watch this on Twitter, we have a few viewers over there as well. If you could follow us there, retweet, share with a friend, leave a comment, whatever you want to do. And on Twitch, you millennials out there, you're still ducking me. Not enough of an audience out there. I'll get you, though. I will get you eventually. I'll get you to buy in. All right, stop playing them video games. All right, so let's go back to the charts. Taking a look at the IWM. Again, similar to the Dow Jones in that we haven't broken out yet on a monthly basis, but we're this close. This close. And in all probability, we are breaking out on the IWM, the Russell 2000. Now, as I say that, I want to point out that there is a symbol. I discussed this over the weekend. A symbol that I like a lot. And it's the IWY. It is outperforming the IWM. The IWY puts you long of the Russell 200 growth iShares. So it's 200 of the Russell 2000. So 10% of the Russell 2000. They are breaking out relative to the Russell 2000. They're outperforming. And if you want more diversification, simply take a look at the VONG. Also outperforming the Russell 2000 as noted by the breakout here. Sorry, folks. I clicked the wrong line. Okay, so right here at the 169.20 level, we're breaking out. So the IWY, the VONG, those are the segments of the Russell 2000 that we're going to be looking to get long of in the coming week. Now, before I speak more about these positions and indices, let's talk about how we did so far this week. Today, we stopped out of Caterpillar, and we took a small loss on that one. Let's bring up Cat, and I'll tell you why I stopped out. And then we'll talk about our positions. Now, Cat, on a monthly basis, we went short of it on earnings. I thought the rally back was going to fade. It didn't. It broke out on not just a weekly basis, but also on a monthly basis. You're looking at the monthly chart now, and we have closed above a breakout point. Now, I was going to stop out earlier in the week, but I think we're going to get a pullback here in the markets. And my bet was that on a weekly basis, we would do a retest of the breakout point. And that's exactly what happened today. So I took advantage of the pullback, reduced the amount that we were down on the trade to very, very marginal, and we just closed out that trade because we were wrong. I can look you in the eyes right now and say we were wrong on the trade. We move on with a small loss because we more than compensated for that trade on our gold mining trade, the NUGT. Bullish key reversal so far on the week. We haven't closed yet. Lord knows what tomorrow brings. But on the month, we are looking very good. I had this up earlier. I'm not going to bore you with this. Daily chart NUGT. It broke out today above resistance. RSI looking outstanding. Stokes looking outstanding. We're going to be adding more. What did we close out for a profit? Because we didn't book profits on NUGT yet. What we did do, though, is that we sold into tomorrow the 33.50 covered calls. They expire tomorrow. We sold them for 13 cents per contract, 20 contracts, $260. Not bad. Take your wife out to dinner because she puts up with you. I know it's a mostly male audience I have out there. What else do we book profits on? We book profits on the XPXL. This is the leveraged ETF of the S&P 500. We book profits on, I think it was the 29th. And then today we pulled back. We retested the breakout point. We're going to be looking to get back long of the XPXL. I'll be sending out alerts to members if and when we do get long, because it's my assumption that the S&P 500 will continue to rally. I am not buying the weakness of today as being the first death knell of the market. I've been saying this for a long time. I am bullish on the market. While I think the economy is going to hell in a handbasket, both the domestic and the global economy, I still think that the stock market is moving higher for all the wrong reasons, because it's manipulation. They want the stock market to move higher. Why? It's election year. We're in election season. They can't have the stock market going into free fall if they want the president to be reelected. I'm a Trump supporter, but we don't drink the Kool-Aid here. We say it like it is. And that's exactly what's going on here. They're manipulating the markets higher. If you want to short this, setup here on a bet that these markets are going to roll over, the risk reward is totally against you. You are fighting the powers that be. So I would urge, think twice about it and sit back, relax. And well, we have a viewer on Twitch. Hey, Twitch, good to see you. Join us, follow us there. Please, I need an audience there. I need to get to the younger generation. And I know there's some passionate stock market traders on Twitch too. So thanks for joining in. So the XPXL looking good. We'll be looking to get long yet again. The SMH, I was going to go over this later on, but we booked profits here as well. Let's go to a daily chart. And we'll pull back to the weekly chart and the monthly chart while I'm on this topic. So we booked profits on the 29th here, and we saw a pullback for the past several days. It may have been the 28th that we booked profits here, 28th to 29th. If I have a member out there, can you please remind me when I booked profits here, when I sent out the alert? Hey, Patrick. Nugget surprised you today. All right, we'll talk about that. So you think the market is ignoring the politics? For today, yes. I think the market is ignoring the politics. No doubt about it. Tom, last week I posted there's hope charts, copper, lumber, transports. Transports took it on the chin this week. Back in Connecticut now. Wow, man, you move around, Patrick. Euro US dollar. Samuel, Euro US dollar you got a profit in that one? Good for you. Good for you. Good stuff. Congratulations on that. 11 p.m. in Italy. Sam is in Italy. We have a global audience. We have people on from this morning, Singapore, from all over the world. It's the greatest thing. I love it. So thanks, everybody, for joining. And for those just joining in, if you could click that like button, subscribe button, bell button if you watch us on YouTube. Those on Twitter, please retweet, leave a comment, like, whatnot. Let everybody out there know that you're following us and that there's a message being delivered beyond the mainstream news. Let's get back to the semis. So we're going to be looking to get back long of the semis fairly soon. What we may have here is the makings for a breakout. We're pulling back here slightly. I wouldn't call this a bull flag setup, but we began to rally off the lows of the day today. Might this be a bottom here? Maybe. We have a filling of the gap, which opened up here on the 28th on the SMH. So I still like the semis. We are rolling over on Stokes. We did see a breakdown on, below support on the Stokes. I really wouldn't read all too much on this. As a matter of fact, I'm going to remove this. I want to update this with a new support level right here, because we haven't broken down to new lower lows yet, right? So that's what matters. Higher lows and higher highs, we want to stay long. Lower highs and lower lows, we want to avoid like the plague. It may look short. So that's the daily chart. Weekly chart, We broke out last week. This week, we did a retest, right? So what was resistance last week is now going to act as support this week. Now, if we fail and we break back down into this trading range, you need to avoid the semis. So we'll be looking for the semis to hold. And if they do that by 3 p.m. Eastern Standard Time on Friday, they rally off the lows of this support level here. We may be looking to get back long of the semis. If they, again, fail and break down below support, avoid. Monthly view, how do we close out October? We broke out. This is the value of TrendSpider. No trend lines, click of a button, trend lines. We broke out. So the semis are looking good here. A little bit of a weakness on a daily basis, but they've come a long way. Moving on to the banks. It's amazing how yields have been pulling back. Well, they've rallied off the lows, I should say that. But the banks have been doing well. I mean, today for the regional banks in particular was very weak. Let's check out the money centers as well here. Daily basis. Yeah, they pulled back, rallied off the lows of the day, but held support on a daily basis. More importantly, though, is on a monthly basis. We pulled back after breaking out in July. We're consolidating. The banks I'm bullish on. We're going to be looking to get long of the banks. So banks looking good. That's the monthly view. Weekly view. Let me check. Bob, could you go over what's good? Hey, Bill, how you doing, man? Good evening to you, too. Welcome aboard. Okay. The banks on a weekly basis. Doji formation. We have a little bit of resistance up here at the 28.27 level. I would be a buyer on a breakout above that upper band of resistance on a weekly basis. And if we break back down in subsequent weeks below this, what should be a support level, I would stop out of the trade. So I would wait for the breakout and watch for, I would set my stop right below this lower band of what should be then support. The utilities. The utilities didn't budge one way or the other on the Fed announcement yesterday. They did well yesterday. This is a daily chart. I'm kind of working backwards here. And they were up again today. So let's go to a monthly view of the utilities. You have the reason why the utilities are important is that the utilities usually rally when you have the Federal Reserve in QE mode, because you have a chase for yield. Fund managers need yield to provide their fixed income investors. So they'll buy up the utilities, they'll pay an extraordinary amount for a minor yield. And the utilities appear as though, while we were down on the month, we're consolidating. We closed off the lows of the month, and in all probability, we're going to continue higher here in subsequent months because the Federal Reserve is printing money. Weekly view. Here's the setup here. We get a breakout above 64.89. I would be a buyer of the utilities. Now, I would use a leveraged ETF for beta volatility. We'll keep this active for several days. All right, so there's our alert for the utilities. We're looking for a breakout on the utilities. Semis we went over. XLK. This is technology. Let's go to a monthly chart first. So very similar setup as to what we are seeing develop on the utilities, in that we had a consolidation, and in October we broke out with a bullish key reversal. So despite the weakness that we saw this past week on several of these names, the path of least resistance for the semis, oh, that's not the semis, sorry, the technology sector is to the upside, a bullish key reversal. It may be choppy. RSI rising on a monthly basis. Let's drill down now to a weekly basis. And if you're just joining in, members, we're going to be doing a live event, a private group event immediately after this. Get your symbols ready and your trade scenarios you want me to discuss on live private session, and we'll get that going at 7 p.m. Eastern Standard Time, okay? Expect that email, please. All right, so the technology sector is set to close out the week with a doji star formation. What does that mean if you're new to technical analysis? It's an indecision bar. You have a tug of war between bulls and bears. Now, we did gap up higher. It's a positive week despite the fact that we have a red candlestick. It's because we closed out the day off the highs of the week. It doesn't mean that we're going to close negative. We have a good week so far. The one interesting point I'll make here is that we haven't seen a breakout on RSI. We've broken out on price, but it hasn't been validated on RSI. So keep an eye on that. You'd want to see a close above this resistance level on RSI to validate this breakout point. Because what may happen here is that perhaps not this week, but next week, we pull back, we do a retest of this breakout point, we get a higher low put in, then a continuation move higher on the XLK, then you get your breakout on RSI. That's what I think is going to set up here. Members will keep an eye on this. We may be getting long of technology on that event. Absent that, I'm not going to chase it here. I would rather wait for a better setup to go buying technology. Emerging markets, not a good week. And that's a concern because the dollar is weak. Now, on a monthly view, emerging markets look good. And the reason why I say I bring up the dollar is because when the dollar drops, it's like a tax cut for emerging markets because their debt is denominated in U.S. dollars. So a weaker U.S. dollar is good for them. So I'm surprised that we got a pullback today and on the week on the EEM. Not all that much because it usually trades with the overall market. But the fact that the dollar is really weakening up here, I just don't think traders understand the fact that it's a tax cut for emerging markets and this is an opportunity. So I will be looking to get long of emerging markets. Now, taking a look at the monthly view here, the higher level view, forget about the daily chart, 15-minute charts, God forbid, stay away from them. At this point in time, at the end of the month, you want to start taking a look at how we closed out the month. Do your analysis that way. At the end of the week, how are we looking on a closing basis on the week? And on Saturday, I'll be doing the week ahead commentary with members where we recap all of these charts and then some, plus our positions and watch stocks, and we review how do we close out the week? What's our strategy for the coming week? Right now, we're doing a pulse check on a Thursday evening of how we are poised to close out the week, and it gives us an idea of where our head should be as we enter the close of trade on Friday. Now, the beautiful part about this chart is that we're setting up a W formation. I'm going to throw some overlays here. You can see that on a monthly basis, we broke out on the month of October above this upper band of resistance. Good stuff. Now, what I meant by a W formation is that we have a higher low, right? Here's the left side of your W. We're forming a triangle formation. Here's the pivot point, the high being 44.84. we're pulling back. This is the EEM, if you want to follow along. And we have broken out, as I mentioned earlier, above resistance, and we're going to form the right side of the W. So here's the pivot point, pulling back now. Now we're looking to see a breakout on the right side of the W above the pivot point. So what I'd want to do here is create an alert. Weekly pivot breakout. That's a continuation breakout trade. So I'd be buying on that breakout on a weekly basis. We're going to keep this active for quite a while, because we may see some choppiness this month, and I want to keep this active, this alert active. And I also want to know if we do a pullback and we bounce, touch or bounce this breakout point, because we broke out, right, on the month of October. In November, do we pull back and touch the breakout point? It was a resistance level. It should now act as support. We want to know when that event occurs. So we're setting our alert for that very purpose, to possibly get long on a pullback. Okay. So here are the two scenarios setting up for EEM. I'm looking for a pullback and a retest of the breakout point. And then when I go looking to add to that position, I'm looking for a breakout above the pivot point. If anybody wants this, I will pop it into chat if you want to take a look at it on your own. And I'll retweet this on Twitter. All right, so there we go. So I like this trade. I like the way it's setting up. And the reason why I'm focusing so much on this trade is because of the dollar, which brings us to the dollar. The dollar has all sorts of problems here, folks. You need to understand what's going on macro view. The macro view is that the goal at current is to kill the US dollar, not by the Chinese, by our own government. They want a weaker US dollar. We are in the midst of a currency war. You've seen the euro weaken for years now. Now you're going to see a rotation. You're going to see, especially now that Brexit has been kicked into December, now the focus is on the United States, not so much on Europe. And it's not looking so good here. So let's talk about the chart on a monthly basis of the dollar. To kick things off, we closed at the lows of the month. And that sets us up for a continuation move lower. Now, let's take our trend lines, and you could see this is the value of automated technical analysis, folks. You got to have it. It's got to be in your toolbox. I use this all the time. Here is our upper band of resistance. That's where we failed to break out of. And is it any wonder that we flash an outside reversal bar engulfing the entire month of September in one bar, and it looks as though we are coming down here. This is on the Dollar Bull ETF, the UUP, to 26.11. And we'll see whether or not that holds. So I think that the dollar is going lower. Let's check out a weekly chart. Weekly basis. We broke down back here the week of the 14th of October. Attempted to rally back this week. Failed. Rejected. Bearish key reversal thus far. One trading day left to go. Anything could happen. We don't want to say it's in the books yet, but it's not looking good. Now, here's a peeve of mine. And that peeve is that we will probably close out the week with both lines on Stokes down below 50. And when that happens, rallies tend to fade. And this is where a lot of traders make mistakes. They don't use the Stokes accurately. Yes, they're good for identifying overbought stocks, oversold stocks, but they're far better, for my usage anyway, for identifying stocks that are losing momentum. And where really you find value is that when you have a stock, especially on a weekly downtrend, as you're seeing now on the dollar, if you're looking to short the dollar, you want to wait for a rally up and into the upper band of resistance. On a daily chart you could use, because once you hit that upper band of resistance, you should expect selling into that resistance bar. And what helps you is to know in the back of your head. That's why multi-time frame analysis, as you have here, multi-time frame analysis is so critical. Because you know in the back of your head, if you're having a rally midweek, that rally is probably going to fade by the end of business on Friday. So that's another arrow in your quiver, having that knowledge. And that occurs when you have both lines on Stokes down below 50. So the dollar, you should be very, very careful of getting long of or sitting in dollars right now. Daily chart, not looking good here. I don't want to spend too much time here on the dollar, but it's weak and getting weaker. As for bonds, we'll wrap up here with bonds. Tom, I know you want me to go over those symbols. You want me to go over them here, or are you going to join in on the private group session? Do you have time? Because I do need to set that up. If you don't, I can go over them now. Sam, you want me to go over NEE? Okay, I'll take a look at that for you. TLT. This is the 20-year bond iShares. It puts you long of the 20-year bond. Bonds had an outstanding day today. Let's check out the month. They were under pressure, but we rallied off the lows. This is critical. We have a doji formation on the month. It's a sign of indecision. So I think that we're probably going to rally here. Okay, you got it, Tom. Weekly basis. We pulled back, retested support, rallied with closing out, appear poised to close out at the highs of the week. So I like bonds at current for all the wrong reasons. They're being manipulated. It's not because the economy is so great you should buy bonds and get your yield. God forbid you get a yield nowadays, right? So for all the wrong reasons, I like bonds, and I think the stock market's going higher. Let's talk about a couple of symbols, and then we're going to sign off, and we're going to go into a private members group session. Again, I put a symbol or a discount code in the live stream chat box for TrendSpider and the Contrarian Trader. You get free trials on each if you want to join in. There are those links again. Okay, NEE. Sam is making the call here. You're nervous about the stock. It's a bit extended. Let's take a look. I'm a big believer in knee-jerk reactions. Now, EEM. Oh my God. A buddy of mine just sent me a picture of when I was like, oh my God. I must have been 20 years old. Oh, okay. Jimmy, if you're watching, thank you for this. This is amazing. Cool. My best friend since I was a little kid. I don't get to see him enough. All right, so NEE. Let's do it, Sam. So Sam's saying that we're overbought here. Nah, Sam, you're all good, brother. Let's do higher level. All right, so I get your point on a monthly view that we're a bit extended here. What could... Hey, Denny. It's all good. Danny, we're going to have a private member session immediately after this. So we're going to sign off soon. If you have any symbols you want me to go over, you'll get a link in a few minutes, and we can go over them there. So please join in. Okay, NEE on a monthly basis. We closed out the highs of the month, Sam. So it's hard for me not to like it. I get that we are extended a good deal away from the 20-period moving average. I don't have the 50-period moving average up here, but we are somewhat extended. I'll grant you that. RSI monthly is a bit high. All right, so yeah, it is a bit high, but it's rising. It's rising. You have RSI, where do we close out? 87.57. All right, in a situation like this, I try to invoke the adage that strong stocks tend to get stronger until they don't. What does that mean to you on a monthly chart? I would begin to get nervous. Expect a pullback early in November, a quick pullback. But my guess is that in all probability, it'll be the pause that refreshes and that we move higher. I'd be eyeballing, if we don't in the second week of November get a new monthly high, I would be a little bit concerned if we have an inside month, but not overly concerned. If we do break out to a new monthly high, that means that you have a continuation move higher into November and then into a Santa Claus rally. So on a monthly basis, it's hard for me to say, you know what, go selling these shares. I think that they're probably going higher. And I'm basing that opinion not on a monthly chart, because the monthly chart is not giving me any reason to sell these shares. Now, if I saw the shares rallying and RSI declining, that's a bearish divergence. I'd be saying, okay, you need to start looking to scale back on your position. Or if we closed off dramatically off the highs of the month, I'd be saying, you got some topping action up here at all-time highs. I'm not seeing that. What I'm seeing is, and this is the reason why I'm talking bullishly, because I already know what the weekly chart looks like. And so I kind of cheated here. So here's your breakout, Sam. We broke out last week. This week, no new weekly high, but what did we do? What did we do? We retested support and we flashed a bullish key reversal on the week. And we are poised to close quite possibly at the highs of the week. So it's very, very difficult to me when I see this kind of price action to get bearish, because I think that there's a very strong probability that you break out. All you need to do at this time, if you have a profit, raise your stops. If we break down below the week's lows, you're already long anyway. Just raise your stop right below the lows of the week. Because if we break down, if we retrace down to the lows of the week, or even if you wanted to move it up on a daily basis, if the overall market is weak, if we break down to below today's lows, just raise your stop up there. Just continue to move that stop higher and let the market take you out. No big deal. Don't worry about it. You have a stock that's trending well. Don't cut your losses too quickly. There's nothing wrong with this chart. Nothing at all. Yes, you make a good observation that's a bit overextended on a monthly basis, but I like it. Good. You're going to raise your stop? Good stuff. And daily chart here on Stokes. Look at these Stokes. Higher lows. Good stuff. Like it. I would just raise stops here. Strong stocks tend to get stronger. That's all. Sorry if I got long-winded. All right, Tom. WTI. Long-term hold. and BE. Okay. What's BE? Bloom Energy. All right, let's do the deep dive. Start at the, oh, there's not much data here. Okay. Start with a weekly chart. Tom, do you know the short interest here by chance? All right. There's not a lot of data here, and automatically that puts me back a bit. Okay, so you have 15% short interest. All right, so I would suggest that you take a look at the number of shares short relative to the 3-month moving average of volume, and then calculate your number of days to cover. Because sometimes when you're using a percentage of the shares that are short, it's not much of a short squeeze that you get if volume is very, very high. And I'm not sure what the moving average on volume is here. So you may just want to double check that to identify what the real probability of a short squeeze is. So we'll begin with the weekly chart, since we don't have much data yet on the monthly chart. And let's go here. We have a breakout on RSI. Stokes are beginning to hook up, and we broke out this week. We gapped up higher, and we appear poised to close there on a weekly basis. Let's go to a daily chart. Nice, 27% share. Okay, good. And I would agree with you, it's a speculative long, especially since there's not a lot of history here. And it's a stock that's priced below $5. But I like the chart. I like the weekly breakout. I like the daily breakout. You have short interest, that's pretty high. I'm going to assume you have multiple days of short covering potential here. You have RSI, which is rising. It should be above 50. Probably not by tomorrow, unless it really moves up higher quick. Probably by Monday. Stokes are rising. Let's go to a 4-hour chart. All right, so on a 4-hour basis, we broke out this last 4-hour bar. We do have resistance immediately above, and you need to respect this resistance level. However, if were I to buy these shares, I can't advise, I'm not a licensed financial planner. Were I to open up a position, or wanting to open up a position here, what I would do is I would watch the 4-hour chart. I would watch for a close above this current resistance level. It should then act as support. I would open up my position. Then, let's take these off. I want to overlay daily resistance onto a 4-hour chart. This is nice. So, on a daily basis, we've on a 4-hour chart, we're identifying the fact that we are above resistance on a daily basis. Now, what I'm trying to identify is where I would want to add to that position after opening up a position on a 4-hour breakout. I'll bring up the 4-hour chart again. On a breakout above this resistance level here, at, let's call it, where do we close? 3.06. Let's call it 3.11 per share. Let's clean this up. And I would look to add long. Probably around here, $3.30. We must close above that level. And then the next resistance level beyond there is around $3.50. So you may get a nice short squeeze out of this. It's looking good. The chart's looking good. Right here is where you're going to have resistance. I just threw the chart, a link to the chart, in chat for you. Tom, can you let me know if that opens up for you, please? If you would. Let's go to WTI, West Texas Intermediate Crude. Oh, no, it's WNT Offshore. I thought it was West Texas Intermediate. All right. We have men's and men's. Let's start with the higher level view. Let's stay consistent here. All right, so I'm mixed on this one because we have declining RSI. Yep, I got it. WTI, right? Declining Stokes. So we're lethargic at current. Me personally, I wouldn't buy it here. Yeah, we closed out the month down below a support level. This support level in blue. And we're losing momentum here. Now, if they gap it up to recapture, let's call it, what was the high? $4.60. Then I would revisit the trade because we're back within this trading range. But at current, we're trading down below key support. So on a monthly basis, I don't like it for that very reason. I would keep an eye on this upper band of resistance here at around, where is it now? At, let's call it $5 per share. We'll round it up. Weekly view. We have a possible head and shoulders setup here. Let's get rid of, we're holding support. We're going to get rid of the trend lines. We'll move the neckline down a little bit. But you have a head and shoulders setup forming here, maybe. It may not get executed for all I know. But I would be wary. Right now we're in a trading range. I don't see a reason to go buying just yet. If you're going to do it, no matter what I say, you got to use a stop. This is a weekly chart. I would use a stop right below the week's lows. If we take it out, we are going lower here. Daily chart. I wish I could take more symbols, but if you're a member, just please go into the members area in a few minutes. I'm going to send out a link to that private group session because I'm running long here this evening. So I'm going to finish up with WTI, then we're going to log off for the evening. Daily chart, we retested support. And I wouldn't buy it here, Tom. I'm not feeling the love on it. I'm just not. I think there's a little bit too much risk here for my blood. RSI is declining. Stokes are declining. Denny, just wanted to say thank you. I'm aware that you have been long of NUGT, so I made a large buy right after the rate cut, 27.6. Good. And sold today. Good for you, Denny. Outstanding. Great to hear. Denny's a member of ours. Tom, does that make sense? You know, I'm just not. I'm looking for a reason to like the stock, and all I'm seeing is a loss of momentum and not a lot of traction in terms of buyers out there. So for all I know, you know, I pointed out a Head and Shoulders setup. You know, I'm not saying it's going to break. I have no idea. The market will tell me whether or not I'm right or wrong. But you know, if we were to have closed out the day today at the highs, or if we were, it's Thursday night, so this is a weekly chart. If at current we were at the highs of the week, I'd be saying, all right, Tom, let's take a look at an action plan here, because the price action held support. We're at the highs of the week. Maybe that means that the RSI would probably see more strength. Not probably, we'd see more strength on RSI, and I wouldn't be so dire. So what I would do is I'd say, let's watch for a new high above weekly resistance, and then maybe you'd scratch the itch, buy a few shares, and then add more on the breakout. I'm just not seeing the compelling reason to go putting on risk right now at this point in time. I hope that makes sense. And if it doesn't, join us in the private group session. And folks, thank you so much for joining in. I really appreciate you joining. I'm sorry I can't take all the simple requests. I have to join in with members, and I have to go watch scary movies with my wife and some friends. And I want everybody to have a great Halloween. Enjoy the evening. If you're watching this on YouTube, please click that like button, subscribe button, the bell button to get notified of future videos. You're welcome, Tom. And if you watch this on Twitter, retweet, please, to a friend, and leave a comment, like, whatever they do over there. And Twitch, I'm watching you, Twitch, you youngsters over there. I know I had some viewers there this evening. I want to lure you in. You got to get past the fake news. And you've been watching a long time. I can see you out there. So thanks for joining in, folks on Twitch. Everybody have a great night and a profitable trading day. Be well.